Welcome back. Markets inching lower now, pretty much back at the low point of the day, approaching 17,850, 90 points down on the Nifty, while the sensex has lost 260 points. The earnings season is gathering pace and the budget is now approaching. We're now inviting Anshul Saigal, the head and executive vice president of Kotak PMS, on the show now. Anshul, it's been a rough start to the year, right? Nifty is down 1.5%. We're massively underperforming the rest of the emerging markets. The earnings picture has not been so bad so far, but Indian markets have just fallen out of flavor. What have you made of the start so far, and how do you expect the near term to pan out?
Hi, thanks for having me. You can't expect Amitabh Bachchan to give hits, again and again. And there will be a time after, say, 10 hits where there will be a flop. And India has been the Amitabh Bachchan of emerging markets, really. If you look at the last year, India was up 3%. While if you compare it to some of the other emerging markets as also developed markets, all of those markets were down big. Say, take the case of NASDAQ, it was down 25-30%, S&P Dow were down 20%, China was up in the last quarter, but it was still down meaningfully from the start of the year, as also the other emerging markets. And some of that outperformance is being given up in this new start to the year. It is also on account of the budget. Some nervousness exists in the market prior to the budget, and that really is getting reflected in prices just now. For the long-term investor, this is a time to really build portfolios. Clearly, a bout of uncertainty is welcomed by the long-term investor, because it is only in volatility that this investor gets the right prices. And we are seeing that play out today. Really, if this continues for some time, there will be a slew of opportunities available in India.
Okay. All right. Hi, Anshul. Good to speak to you in this new year and wishing you a good year ahead as well, Anshul. Anshul, on the headline index, we could be in for a period of volatility, maybe some consolidation as well. But what about the mid-cap and the small-cap indices? The last year, everyone was only talking about the way India was outperforming. That's the headline index. But there was some pain in select stocks in the broader markets. Do you believe that 2023, there will still be some pockets of strength from the mid and the small cap space? And more importantly, if you could name a couple of companies, with due disclosures that you'll have been recommending to clients, or you'll hold it. Give us a couple of ideas.
Nigel, you're right. Thanks for having me. And hi, good to be speaking with you. You're right. Last year was a year where small and mid caps corrected. There were many which were down as much as 30, 40, 50%, and these were quality companies. The key reason for that to play out was that there was inflation last year, and because raw material prices were going up, gross margins were kind of compressing, and that was leading to these stocks actually coming off. Now, clearly, commodities have corrected, and in the current year, we will not see the same amount of pressure on gross margins. In fact, we could see an expansion of gross margins in the current year. So stock-specific, sector-specific, there will be opportunities. We do believe that for the discerning investor, this will be a year of differentiation. You could well be in those right pockets and differentiate yourself in the current year. Some of that played out last year when you were falling less than the rest of the market. And in this year, it will be on the other side where you may actually rally more than the rest of the markets. Some pockets that we are looking at and where we find opportunity are financials, particularly NBFCs, which have been forgotten. Housing finance NBFCs, where the liability side is kind of fixed on prices. And the asset side is getting repriced because of interest rates moving up. It is there that we are seeing margin expansion, and we find opportunities such that prices have been kind of flat for the last 9 years, while their balance sheets have tripled. This is an anomaly, as we saw in the PSU banking space over last year, that anomaly got corrected. We believe that this anomaly, even in the NBFCs, will get corrected or should get corrected in the current year. We find opportunity also in defense indigenization. There are a number of companies, both PSU and private, large and small, where this theme is seeing significant tailwinds on order booking, and as a result, companies have outlooks which they haven't seen over the last, since inception actually, and so we find opportunity there. The sugar cycle is extremely well poised at this time. For the first time, at least in my working life, I've seen international sugar prices higher than Indian sugar prices. That to me is on account of how the world perceives the demand-supply scenario to be. In our judgment, for the last 3 to 4 years, monsoons in this country have been quite robust. And it is, again, quite an anomaly that you've seen such consecutive monsoons, good monsoons in this country. If there is a failed monsoon this year, then sugar prices globally would be on fire, because India is the balancing figure in the global sugar trade. As much as 8 to 10 million tons of sugar is exported from the country into the world. If there is no room for that export to happen because of failed monsoons, then sugar prices globally will be on fire. And we anticipate that chances of that happening in the current year are high. Capital goods, because of PLI and other manufacturing themes, Make in India, Atmanirbhar, etc. Significant tailwinds there. Real estate, again, tailwinds. These are some pockets where we find opportunity. And we think that because of the correction in mid and small caps last year, immense opportunity has emerged in these pockets. And these are mostly in the mid and small cap space.
Anshul, hi, good afternoon. Sorry, the first sector that you said where liability rates are fixed and on the asset side it's getting repriced higher. Sorry, you meant which subsector within the financial space?
Hi, Prashant. I was referring to the NBFC, home finance NBFCs in the financial space when I was talking about that. There are a few companies where this phenomenon is playing out just now, which is why NIMs have tailwinds. And while there are also volume growth opportunities, but even if that wasn't the case, because of NIM expansion, you would see upsides on profitability, which are absolutely not reflected in valuations today. In a market which is trading at 20 times price to earnings, Nifty EPS expected is $900. Nifty is at 18,000. In a market like that, you're getting companies at 5-6 times price to earnings with growth trajectories of over 15 to 20%. That is not likely to sustain for too long.
But on the liability side also, costs will go up, right? So even with a lag, or for some time they can be where they are, but eventually that will also move up, right? So the opportunity for NIM expansion would be temporary in most cases.
You are right. Although in that period, while incremental liabilities are getting repriced up, the NIM opportunity will be. You see, what happens is that if you had NIMs of say 3.5% till some time back, and because of prices coming down, that got corrected to 3.2, 3.3. First leg up will be higher than 3.5, and thereafter maybe it will get normalized at 3.5. But even that number is substantially higher than the current NIMs. So the normalization of NIMs itself will offer significant uptick in profitability.
All right, Anshul, thanks so much for stopping by and sharing your thoughts. Wishing you a good year ahead, and we look forward to hearing your thoughts as well. We still believe that there are select stocks and sectors that will do well, particularly the breadth of the market. Well,